investing with a purpose, and you'll hear that this is kind of a multi-layered conversation that we're talking about here, because investing with a purpose can mean a lot of things, and it means a lot to the gentleman on stage with me. So I'm going to let everyone introduce themselves, starting with you, Michael. Nope, it's already on.
All right. Hi, my name is Michael Yagi. I'm a co-founder of Sundial protocol, and I'm going through an investment round right now. I previously closed 2 rounds before this.
And so, sorry, what is Sundial protocol?
Yeah. So Sundial protocol is a layer 2 on Bitcoin. So focusing on improving speeds, but primarily generating yield for people that want to stake their Bitcoin.
We're going to talk a lot about that. Okay, Seira.
Hi everyone, my name is Seira Yun. I'm the founder of Socious Fund. So Socious Fund is a decentralized fundraising platform. So we leverage quadratic voting, quadratic funding to bring more capital to underrepresented founders. So only 2% of venture capital is going to female founders. Only 2.8%.
2%?
2% in the world. And only 2.8% going to the founders in the global south, so emerging markets. And we are trying to rectify the situation by letting people decide, letting our communities decide how to allocate those funds. Because this investment disparity happens because we have a very small number of individuals in the global north, in North America, in Japan, in Europe, making decisions on how to allocate those funds. But if we let communities decide, thousands of people vote to decide how to allocate these funds, then we can rectify this situation. And we are leveraging hyperledger identity, self-sovereign identity solution to make sure that there's no Sybil attack. So like,
all right,
people
well, we'll talk more about how that works in a minute.
Yeah.
But you know, those damn institutional investors from the traditional side, no one likes them. So speaking of which,
my name is Samiz, one of the partners at Draper Dragon. We are a cross-border focused fund within the Draper Venture Network, specifically focused on digital assets. So we've been around since around 2015, started our crypto fund in 2017, and now focused fully on the whole institutional landscape within crypto, blockchain, DeFi, all around the list. So excited to dive into a lot of stuff we're about to talk about.
yes, and you have been investing with a purpose since the very beginning, and then some. So forgive the joke. Anyway, let's talk a little bit about kind of the state of the industry right now. We've got here in the United States a very pro-crypto president, a pro-crypto general administration, and it seems like a lot of the Congress has been, well, pro-crypto, to the extent that we've seen stablecoin legislation in the United States. What does this mean for the industry? Are we in a bull market? Are we in a bear market? Because investment decisions are often made based on future expectations of the market. Michael, why don't we start with you?
I'll add what I know and let the other panelists add on more. But yeah, I think we're definitely seeing a lot more capital flow in, and there's a lot more bullish sentiment in terms of people wanting to even incorporate their entities in the US now. It's a lot friendlier to do development and stuff like this. But there's still that little bit of uncertainty around all the stables and stuff like that. So I think some of that is still to be seen. But yeah, overall sentiment is for sure on the uprise, I would say.
Samiz, would you agree?
100%. I think these regulations that have become more clear, lowering barriers of entries for institutions to come in is a huge factor. And I think it's super bullish. And I think within the next 2-3 years that we're seeing this regulation landscape get more clear, lower the barriers for entry for everyone else, we're going to see a mass growth in all ecosystems in general. So it's exciting stuff.
I mean, historically, there's been a 4-year kind of cycle. And it seems like it's a little bit off this time, as we're seeing kind of a bull market even towards the second half of the year after the Bitcoin halving. Is that something you think is, well, has something changed?
I think a lot more institutional adoption. Obviously, digital asset treasuries is a big reason for that. A lot of institutional flows are coming in, and that's just causing much more clarity in holding assets and not being worried about what's going to happen if they hold it, why wouldn't they, why would not. So a lot of institutional flows are coming in. That's going to change it from a 4-year cycle. It could extend it. It's impossible to tell, but I think it's exciting seeing these new flows come in.
The fact that it's even possible that things have changed is seemingly very positive. How are the founders that you're working with, Seira, how are they perceiving this? That is to say, I mean, are they willing to expend all their energy in this? A lot of the early stage founders, some of the ones that you've worked with before as you incubate and you make some of these investments, they're not full-time in their startups, right? They need Are they willing to put 2 legs in because they really believe in the market?
Yeah. So some of them are already full time, but like they start off like part time, right? And I think there's a lot of optimism in the industry that in terms of regulations, in terms of market conditions, I think there are many more companies and founders trying to find their legs into our industry.
And you're a founder right now going through fundraising, and certainly the Bitcoin space has been booming in general. Ever since the ETFs were approved in the United States about 1.5 years ago, although there were others overseas, it seems like there's been a rush of capital into the Bitcoin space, and now a lot of innovation. We saw a lot of Bitcoin layer 2s premiering last year. Why the sudden interest, I'd say, in Bitcoin L2s?
I would say there's a lot of stagnant capital, right? Everyone's trying to get and figure out what's next once you have the Bitcoin, right? And when Bitcoin's getting even more adoption, everyone's racing to say, okay, Bitcoin's here to stay. What do you do with it once you have it? How do you actually turn it into a yield-bearing asset? I think the road is very clear for a lot of people. It's mostly just like, how are you going to get there, and can the tech keep up with the interest and the demand that's there?
Well, I want to kind of dig deeper on that. Generating yield on Bitcoin requires a few things, right? Among others, and please explain to me, I'm an amateur here, but doesn't it require me taking my Bitcoin and in some way putting it on a platform, maybe wrapping it in some sort of manner, and then from that, kind of inserting it as what, collateral, perhaps in a lending pool? How does it work? Can you kind of explain it to the audience a little bit?
Yeah, so there's a couple of ways to do it, but essentially it boils down to there is going to be some risk tolerance that certain people are going to want to opt in for. And so it might be different riskier positions like maybe insurance or different lending protocols, DeFi.
So forgive me, even before we get to that, it's the reason there's going to be some risk is because there are concerns with maybe the protocol that you'd be interacting with. Is that correct?
No, not on the risk, on the protocol side. That's what we're trying to solve on Sundial, is have a very trustless bridge or trust minimized. So there's no, I think when people think about risk, they think more about if they're
like counterparty or default risk.
Yeah, exactly. Yeah.
Oh, interesting. Well, that sounds like a pretty normal thing, but there might be some even within the Bitcoin ecosystem, right?
Exactly. I think though, to really touch on your point, the Bitcoiners, they want to have full assurance when they bridge their Bitcoin that it stays on Bitcoin. It's fully auditable. There's going to be no downtime, no hacks, anything like this. Which is why when we're talking with these institutions, building on a UTXO model is like a very standout selling point, right? Because to your point, like the risk, is it going to be there? Am I going to be able to bridge it back? What happens if all these DeFi hacks happen? Am I being exposed to that risk?
I mean, there have been so many bridge hacks where billions of dollars has been exposed, right?
Yeah. Exactly. So this kind of thing is very, unfortunately, I think we get used to it quite a lot. On the crypto side, we see, we're like, oh, it's another hack, it's another one of these. Oh, it's okay, we keep building. But that's not going to fly when we're talking to institutions. And that's why when people hear about Cardano again, they say, oh, we haven't thought about this for a little bit. But when we tell them, oh, it's been online for 7 years, it's never been hacked. There's never been any wallet drains or anything like that. Now all of a sudden, it's very appealing to these institutions. So, yeah.
Well, I want to dig a little bit further into what you mean by Sybil attack resistance in kind of this socially funded, network that you've built. Why is that important? What's the concern?
Yeah, so the concern is that in normal quadratic voting systems, so you count how many people support your project. So the number of people who support your project is an important factor. However, if you can split your accounts or your wallets, then actually one person can vote as 1,000 people, 2,000 people, right? And that's been an issue in the Gitcoin ecosystem. They use also a quadratic voting mechanism. So what we are trying to do is that we leverage our DID, decentralized ID, self-serving ID system to combat Sybil attacks or wallet splits, so that one person can have only one account. But as we know in this industry, we don't want to expose our name or gender or like any of our personal information, but we can do that with selective disclosure feature of Hyperledger Identity. So like you're actually proving that you're a human being, you're not a bot, and you have only one account, but without revealing your identity. So that's why like we were able to onboard lots of people, because people can protect their identity, but at the same time prove something that they're a human being.
I wonder, is there a specific, either maybe you don't have this data on purpose, but demographics that have a lot of interest in using this DID technology that maybe before wouldn't participate in things like investing or making group decisions, but now are? Have you seen like any trends when it comes to the use of DID?
Yeah, so I think DIDs are used in, I guess, like less regulated industries. So like I think financial industries are highly regulated, and even if like it's possible to do selective disclosure and zero knowledge proofs, but the government regulators demand the financial institutions to keep all the records of each customer, and that is very difficult to get into. However, other industries like in education or less regulated industries like cigarettes and tobacco selling, it's actually happening. So we actually work with one alcohol seller in Japan. So their problem is that they need to check whether the customer is at least 20 years old. But in the past, they had to receive all the information, their name, their gender, where they live, everything.
It
right?
feels ludicrous.
Exactly. We just want to know whether you are at least 20 years old, right? But now they are able to actually do that with self-sovereign identity. And so they can prove, customers can prove that they're at least 20 years old. Therefore, they can purchase alcohol and without revealing their name, gender, or any of their face ID. So, and the other side is that the vendors, the companies that sell alcohol, they actually can reduce their information security costs. So in the past, they had to actually invest a lot of money into information security because they're holding very sensitive information, and if it gets leaked, then someone can pretend to be you and create a credit card, and so it's a very dangerous territory. However, with our solution, they don't have any sensitive information, so there's nothing to protect, so they can reduce their information security costs. So that's been revolutionary for some of the
That's got to be
customers.
a very big deal for investors like you, watching back office costs drop without having any risk to, I guess, upside revenue.
100%. And I think a big part of this is the Reg D accredited investors, institutional investors that want to come in. You want to make sure they're verified, right? So having these type of DIDs, like one that we invested in, Holland and now Human Tech, they do exactly this, where you verify this is the person. And for financial instruments, what would be interesting is make sure someone's an accredited investor to be able to participate in whatever investments it might be via this technology, and to verify and secure that that's the actual person. So I think that whole landscape is just, again, making a very complex situation dumbed down, simplified, and lowering the barrier of entry, but making it much easier because it's much more clear to understand what identities would be for who.
I'm eager to learn more about kind of this incubator program, this education system you put together with Draper University, where I believe you helped kind of incubate some Cardano-based projects. Can you tell the audience a little bit about that?
No, I'm super excited about that. So Draper University did an amazing accelerator program, and us at Draper Dragon, one of our other partners here, James, he's been within the Cardano ecosystem for a very long time, and so have I. So we've been wanting to look into this ecosystem, and seeing Draper University do something like this, we're like, perfect, let's jump into it. So I joined them for about a month. I stayed with them. Absolutely amazing cohort. These guys were stellar at doing so many great things, partnering with each other. Great, it felt like a family there, which was awesome. And not many other ecosystems you could see that, so the community was really there. And we were very excited back then because one of our theses for the fund is, the Bitcoin DeFi, UTXO environments. And now that we can focus within Cardano, I think we can really do something great within both landscapes.
What are you seeing to that end? I mean, you're seeing a lot of deal flow. My guess is as much as ever, certainly, or since 2021, maybe. What are the trends you're seeing as an investor? Like, what are you seeing a lot of proposals heading your way? What are the trends?
I think the biggest thing is, we always say DeFi, TradFi. Now it's just finance. So a lot of this bridging from Web 2 to Web 3 that we're seeing is being simplified and being looked, and that's going to the public markets. So really, it's institutional, quote unquote, DeFi, institutional finance, using blockchain technology to simplify and make whatever operations in Web 2 could be improved. That's where Web 3 comes in. So I think the clear thing is just making everything simplified, but in the back end, it's very technical and complex, but it does the job right.
The purpose of this panel is investing with a purpose. And of course, you have an obligation, you as a VC, to your LPs to deliver the highest possible absolute returns. But at the same time, I'm sure all of you, you're all human beings, and you think about kind of the state of the world and where you want it to go. Have you made any investments, you or your fund, that you feel really proud of, that you think are going to have a positive, beneficial impact?
I think one of my favorite ones that we did was EtherFi. EtherFi is a restaking platform as it started, and now it's into the financial world, having a cash card, having liquid restaking, all these different complex DeFi activities, but simplified for a Web 2 user. So they have a cash card, which is great. I use it all the time to get some coffee. I get some cash back. They restake the cash back. I earn yield without even knowing it. And a lot of my buddies in Web 2, started using this because they're saying, oh, I'm using a debit or credit card with, say, 1.5%, 2%, but now they could just quickly onboard on there and start spending it. So that's one example of this type of thing.
You see that having an impact for apps for everyday people are going to be able to earn real yields that could multiply their fortunes, make paying rent a little bit easier in a high inflation universe.
Exactly, and what it's doing is increasing the total addressable market of the entire ecosystem. Retail guys, everyday users are coming in and using these type of platforms, and they're contributing to this addressable market that's growing, and that's exactly what we need.
I like that. So one way we can measure impact is by how, I guess, it makes crypto tolerable for normies, for everyday people. Because we all know here, we're a bit in the bubble, how powerful this technology is and how transformative it could be. But, I'm sure this is something you're thinking about all the time. How do you make this mainstream?
Yeah, very good question. I think, but first, shout out to Draper Youth. So both Socious and Sundial team have been part of the program. Thank you so much for your support. It's been a great experience. So how do we make our industry mainstream? I think there are several steps, but first is UX, so user experience. I think there are many things that we are so used to, but for normies, probably it's the first time they see it, and then they drop. It's just too complicated. Like for example, mnemonics or seed phrase management. In the real world, actually, no one actually writes down 24 words on a piece of paper to keep your wallet safe, right? So what we did with our Socious wallet, we have a decentralized ID wallet, and we actually shifted from this single point of failure in seed phrase management to two-factor authentication in file, backup file protected with a password. So everyone knows how to save a file in a Google Drive or and also manage your passwords, right? And because it's two-factor authentication, if hackers get into your computer and steals your backup file, without your password, they cannot do anything with it. And vice versa, if they have their password but no backup file, they cannot restore the wallet. So it makes it actually safer and also easy to use for our users. And our users are mostly normies, and we are trying to onboard people to our industry through our solutions, and we make it look like it's a Web 2 solution, but in the background, we're using Web 3 technology so that people even notice that we're actually using Cardano.
Michael, as a founder, I'm sure you're thinking all the time about how to onboard kind of different parts of the supply and demand side. You're building right now kind of a protocol where developers should be jumping on board, and then maybe some of those developers have consumer-level applications. Yes, we talked a little bit about DeFi, but a Bitcoin layer 2 could conceivably host lots of types of applications. To what extent are you trying to foster that kind of retail adoption with Sundial?
Yeah, that's a good point. So at Sundial, we already from day one have a pretty rich ecosystem with over 50 partnerships, a lot of them coming from the Cardano ecosystem, actually. And so what's really important is for onboarding new users is we focus on not only on DeFi users and things like that, but also consumer retail users. And so what Seira was saying was making it really streamlined so that you don't even know you're using Web3 is, I would say, like the first thing you need to do, but also making sure that the value add is very clear of why your business, when they're choosing to build on Sundial, is known from day one when you're integrating with us. And so what kind of capital flow are you bringing? It doesn't have to always be a token. It can be financial capital, social capital, creator economies, things like that that want to integrate seamlessly with other tokens in the ecosystem. So as long as there is value being exchanged between different platforms, that's a good use case for Web3. And so that's what we're really trying to encourage everyone building on Sundial. So Ascent Rivals is a gaming one that we're trying to go to market with, and that should be offered.
Gaming is a fascinating pathway, right? Gaming is a much bigger industry than the movie industry, of course. We know this. But I've got to say this, there have been some hiccups so far, right? I'm sure did your fund ever invest in a gaming company, Web3?
Yeah, no, we've definitely done some gaming investments, and I've gamed before in the early days, and I love that ecosystem. I think it fits right there, but I think just the adoption is not entirely there. I think it needs to have that bridge of Web 2 aspects. In the back end could be Web 3, but there can be friction for any regular gamer to come on and play, and I think the friction is pretty there for a lot of these gaming ecosystems, but I think it's getting solved so slowly, so it's looking good.
Yeah, maybe it's that UI issue, right, for some of these gamers, because God knows there's tons of them. They are very willing to spend on digital native assets, aren't they? And they're very happy spending many hours in front of a screen, which we in crypto do anyway. So they seem like there's a Venn diagram overlap.
Yeah, and esports, competitive gaming, that's a prime use case for blockchain, is making sure the gamers get paid properly, and the play to earn models and stuff like that can really be integrated well.
We've got about a minute left. Michael, let's start with you. What's your prediction for kind of what was most exciting, your prediction for the rest of 2025, if you had to make one? Doesn't have to be about price, but what do you think is going to pop out and stand out more by the end of 25 than it does today?
I just have to go with Bitcoin DeFi.
More Bitcoin DeFi,
More
okay.
Bitcoin DeFi.
I believe it. Seira?
Widespread adoption of decentralized IDs.
More DID. That quickly. The fact that you're saying it's that mature is remarkable. This has been a dream for 10 plus years, but I hope to see that. And Samiz, what do you think?
Skyrocketing addressable market, and every institutions we use every day, they're going to have a blockchain component to them, whether it's banking, whatever sector it is. We're going to see it mass adopted.
Mass adoption into the institutions. Well, I'm very bullish. Gentlemen, thank you so much for this. Really appreciate your time today.
Enjoying Rare Evo? Then lock in your spot for next year right now. Rare Evo 2026 is already in the works, and it's going to be even bigger. More chains, more builders, more connections. Tickets are live. Go to rareevo.io/2026 to grab your early access pricing before it's gone. Don't wait. Be first. Be part of what's next. We'll see you at Rare Evo 2026.